Hello everyone, welcome to today's video on market outlook for the month of February. In this video, we are going to analyze both Nifty and Bank Nifty. We are going to explore the short-term wave as well as the long-term wave, where the market has reached and how it is going to play out. That's everything we are going to cover in this video. So do watch it and let us know your comments. Let's get started with the analysis. At first, let's start off with Bank Nifty. On the left side, you see Bank Nifty charts. It's in the days time frame, all right? And what we have done here is we have drawn an Fibonacci retracement levels all the way back to June 2022. The market started rallying up and then it reached its peak in October 24. And if we have to draw retracement levels from this to here, then we get the retracement levels of 0.23, 0.38, 0.5 and 0.618 at these levels, that is 49,000, 45K, 43K and 40K. This is all like too vast, I understand. But then having these levels marked is very important because you never know that when market crashes, and then if it crashes, you don't have time to analyze. So certain things are always, permanent on your charts. And right now, these levels should be there as a guiding force for us to make decisions in terms of any black swan event. Right. Moving forward, let's explore what happens in the 1 hour time frame, which will give us fairly what's happening in the market in recent times. You see that the market has hit some sort of channel, and it's been trading within this channel for quite some time. Let me try bringing in. Okay. Um, we have this parallel channel drawn, connecting all the lows and the highs in days candle. We drew this channel, and it's staying somewhere close around that channel all this while. Whenever it tried to break this channel, it was quickly dragged down. Again, it tried to break down, it came down. Now you see a couple of attempts were made to breach this zone. However, it re-entered into this zone. Now, what can possibly happen? The median that you see here, that's staying somewhere around 52,100, 200 around that levels. So market would likely to test that level if if the bulls are trying to push. Positionally, what you can expect is 52, 200, 300 ranges is something that you can expect in the month of February. Having said that, market need not have to respect these levels. It can also continue to go down, considering the very long term corrections that was due, um, owing to the massive bull run we had for last 1.5 years. What if it is further falling? Till where it can fall? 0.382 level is the first important level that stays at 45,818, right? Roughly you can call it as 45,800. So either if it is breaking the channel, then we can expect 45,800 levels, or if it is going up, we can expect 52,300 levels. So these are the two critical levels to watch out for in February. Now, some of you may ask how it's like vast, around 2,000 points on the upside and almost 3,000 points on the downside. How do I plan this? For safe play, what I would suggest is that you can create some sort of OTM straddles of March month end contracts. If you don't want to play directionally, then you can create March end contracts. Something trading around 500 rupees, 600 rupees, you can buy both the sides, puts and call options. And any side there is a massive breakout, that's going to be rewarding. But ultimately, it's a patience game. Like, not everybody can wait that long, and I do understand that. There are buyers who wanted to be active in the market and don't want to take some position and then wait for weeks to pass so that they achieve their break even. They wanted to also play on the intraday basis, which involves higher risk. As an option buyer, you involve yourself into a open risk. So in case that you wanted to analyze and then go deeper, and you have time, you wanted to study what's happening on a swing basis, like intraday basis, then yes, we need to reduce the time frame and dig further. So let's go and study it in 15 minutes time frame. This is for intraday. At intraday levels, you can clearly see that the market has offered enough number of testing on this line. You can see the number of trades over here. So many number of trades, and as soon as it tried to go, and then it had a severe fall, but then here it got arrested. Again, it's bouncing off pretty well. So which means we are in a critical decision point where the market has already taken a reversal and likely to continue to move on the upside. So for tomorrow, what can I expect? In that case, you got to zoom in further and see the next levels of target where the market, see here it had a fall and then there was a pullback. Again, it has gone down, right? So this is one level where the market would like to hit first, which is 50,400. So if you are looking for some sort of intraday targets, then 50,400. Supposedly there is a gap up opening and then it's going up already 50,400. Then what should I do? Then the potential expands to this levels. You can see that there is another level over here that is around 51,065. So these are the two levels that you can expect provided the market is continuing to trend tomorrow. But then in my opinion, it's very likely that it can give a gap up and then consolidate. Considering tomorrow to be Wednesday, there will be a lot of erosion, and I don't expect much of a moves for intraday tomorrow. There will be a lot of premium erosion happening, particularly on the call side, because the call premiums are super high, and the put premiums are decaying much faster as well. So, which means beyond a point, the put has become absolutely lucrative, it is eroding super fast. Then the buyers may be interested, and at the same time, the call premiums are super high. So the best way to make money is to take down some reversal. So I expect not crossing 50,500. It's very unlikely. In case if there is some sort of overnight events and then something good news coming up, then we can expect 51k, not beyond that. I don't see any sort of crazy moves happening, at least for this week. It's going to be slightly muted, more chances of market coming down with any gap ups. If it is opening flat, then it could maybe play in a very tight range of around 100 points, 150 points, and then eat the premiums. So as an option buyer, Wednesday is not really ideal. Particularly this Wednesday is not very ideal. We have come from the budget day, and everybody was anticipating some sort of high-end actions happening and then crazy moves coming and all. It's all done and over. The news is all over. So don't have a very high expectations. It's going to be very subtle and small erosional moves happening now and then. If you are a scalper, then wait for the right opportunities, add some EMAs, and then make good decisions. So that's the update. On the downside, what are the prospects? If the market is going to come down from here, I feel that the market would offer a good level of support around this level. This is where the market picked up, which is 49 800, you can call it. That would offer one level of support, and breaking which you see a gap over here, momentum. Yeah, this would be a good support, which is 49,500, you can say. And definitely this 49,300 would be a massive support. So these are the three levels of support on the downside and the two levels of resistance on the upside, which is 50,500 and 51,000 on the upside as resistance. And on the downside, you find support around 49,800, 500, and 300. So that's the update for Bank Nifty. Now let's see what's happening in Nifty. Nifty also has almost a similar pattern, and I have days candle channel formed here. It goes way beyond. It's still in the days candle, you can see. And it tried to break off and then it gave a very good breakout, but then it also came down crashing faster. Now it's trading just at the base of the channel. So it's completely a different scenario in Nifty as compared to Bank Nifty. Bank Nifty is trading within this long-term channel, but here you see that the long-term channel is broken and it is trading below. Uh, in this sort of scenario, what you can anticipate? Pretty simple. Nifty is going to be the decisive index for this month, and you can see that there will be a good level of resistance coming around this level at the base, which is, you can call it 24k. So at 24k you can anticipate a strong resistance, very strong resistance, because bears will try to attack and then keep it below the channel. That is one aspect. Breaking which you can expect another set of resistance around 24 to 20. You can see it over there, and the next levels are pretty far away, but then if we have to call it, then 24,550 would be one of the levels where you can find resistance. So you can call it resistance or you can call it targets. If there is an upside break, then yes, 24k, 24,220 and 24,500. These are the targets positionally for this month. On the downside, where you can find the support, which is the downside targets, that would be 24 450, and the next levels should kick in at this level, 20. Okay, this level 23k would be the next level of support, and if it breaks, then you can expect at 22,800. So these are the three levels on the downside. So let me also quickly reiterate the targets. On the upside, that is 24k, breaking which 24,220, and furthermore 24,500 or 550, right? So that is the upside. On the downside, you can expect some sort of support around 23,400, breaking which you can expect around 23k, and at 22,800. So these are the targets. Now what will happen? Supposedly these two indexes are going congruently, and then they are not in sync. Say Bank Nifty is going up and then Nifty is coming down or something like that. Let's understand, Nifty is the major index and Bank Nifty is a sub index, right? It's a derived index for sure. Now, if Nifty is going down, which means it has broken the channel and it is also driving the market entirely on the downside. It's not just the Bank Nifty index alone. It involves IT, it involves manufacturing, and all the other contributors. All of it are going down. Then it indicates a strong weakness. So if it breaks 23,400, then it continues to go down, then I expect some sort of serious corrections to happen in Bank Nifty as well. So you have to be really cautious. Just because you get some sort of confirmation on Bank Nifty doesn't mean that it is going to be an absolute confirmation. You also have to parallelly check with Nifty. Now, positionally it's fine. Then what can I do on a swing basis or in an intraday basis? Let's reduce the time frame to 15 minutes, and then here you see immediate targets, which I already mentioned. This is the level 24k. Then in between I said 24 to 20. This is the level 24 to 20, and 24 550 on the upside. These are the targets for swing. And the downside, yes, this is the level 23 400. Then 23 200 can also be taken if you want. Furthermore, 23 150 and so on, and absolutely 23k will offer another level of support. There will be many supports coming in if you are reducing the time frame. So in longer time frame, I said like 200 points of supports and resistance. In shorter time frame, you will see it as happening in 100 rupees gaps. So this is the larger overview of the market. Now, if you ask me what is likely to happen in this week, there will be enormous amount of consolidation and erosions happening. Particularly, watch out for call entries if you're an option buyer. Yes, calls do not decay sometimes, but sometimes it decays super fast. On the other hand, puts are decaying pretty much faster on most days, unless it is a trending day on the downside. If it is not a trending day on the downside, even if it is a flat day or slightly bullish day, then puts are getting butchered. So the way to deal with this sort of market is to ensure that you have um, put options of farther expiries and clubbing it with weekly expiries, and choose the trades very carefully, get the trend right, and just the lot size are also increased, 75 in Nifty and 30 in Bank Nifty, so you don't have to take much risk. Just one lot, two lot, test the water. This year it's going to be completely a different market. Don't be over enthusiastic and then try to do some sort of crazy stuff. Stay calm and then analyze the market, get the trend right, and then test the water enough, and as you feel comfortable, then you can increase the volume or play with your comfort. And I just wanted to give a word of caution. This is only for educational purpose. There are no calls given. This is only purely a study of technicals. You can always challenge me. You can always say that I was right, wrong, whatever it is. I'm most open to that. I am not a SEBI registered, advisor or anything. This is only in the interest of love for the market. So do feel free to share your comments. Looking forward to see you all in another video. Thanks a lot.